Hello, and welcome to this webcast, an introduction to IPSAS 44 non-current assets held for sale and discontinued operations. I'm Joanna Spencer, a Senior Manager at the International Public Sector Accounting Standards Board, the IPSASB. This webcast will provide an overview of the key features of IPSAS 44. You may also find helpful the at-a-glance summary of IPSAS 44, which is available on the IPSASB's website, www.IPSASB.org. This webcast will cover the following aspects related to IPSAS 44: why the IPSASB undertook the project, the benefits of having IPSAS 44 as part of a suite of IPSASs, the public sector specific issues the IPSASB discussed when developing IPSAS 44, the scope of IPSAS 44, that is, which transactions are inside and outside the scope, and the accounting requirements of IPSAS 44. Public sector entities often sell non-current assets that are no longer required. For example, they may have fighter jets that are redundant, a school which is no longer in use, or a power generation facility which is to be decommissioned. Until the issuance of IPSAS 44, there was no specific guidance on how an entity should account for these sales. As such, IPSAS 44 fills this gap. IPSAS 44 will bring several benefits to public sector accounting. It will bring increased transparency and accountability surrounding the sale of public sector assets, particularly regarding the price for which these assets are sold. There will be a consistent approach between public sector entities on the sale of non-current assets, which will increase comparability between entities, and the enhanced disclosures required by IPSAS 44 will provide users of public sector financial statements with useful information about discontinued operations and a public sector entity's disposal of non-current assets. When developing IPSAS 44, the IPSASB considered several issues which are prevalent in the public sector. The first of these is what is meant by available for immediate sale. One criterion that must be met for a non-current asset to be classified as held for sale is that it must be available for immediate sale in its existing condition. However, in the public sector, often regulatory or legislative approval must be obtained before an asset can be sold. For the purposes of IPSAS 44, a non-current asset does not meet the requirements to be classified as held for sale until all approvals have been obtained. This is because until that point, the asset is not available for immediate sale. A second issue considered by the IPSASB is the time period by which a sale must be completed. IPSAS 44 generally requires sales to be completed within 12 months. However, in the public sector, this can be challenging due to the specialised nature of some assets. Nevertheless, IPSAS 44 does allow an extension of this period if the reason for the delay is outside the vendor's control and they are still committed to the plan to sell the asset. A final public sector issue concerned the measurement of assets acquired in a public sector combination that immediately meet the criteria to be held for sale. That is, the receiving entity intends to sell these newly acquired assets. For such assets acquired as part of a public sector acquisition, these assets are measured at fair value less cost to sell. However, for assets that are part of a public sector amalgamation, they are to be measured at the lower of carrying amount and fair value less cost to sell. Public sector entities may dispose of non-current assets in many ways. Therefore, it is important to determine which types of transactions are inside and outside the scope of IPSAS 44. IPSAS 44 has a narrow scope and is only intended to include assets sold on a commercial basis. As such, there are certain criteria that must be met to be classified as held for sale. The key principle is that the carrying amount of the asset is to be recovered through a sales transaction. As mentioned before, the asset must be available for immediate sale. The sale of the asset must be highly probable. For a sale to be highly probable, management must be committed to the plan to sell the asset. There must be an active market to locate a buyer, and this plan must have been initiated. The asset must be marketed at a price relevant to its fair value. The The sale must be expected to be completed within 12 months, but as mentioned, an extension is available in certain circumstances, and actions undertaken indicate that the plan is unlikely to be significantly changed or withdrawn. All these criteria indicate that the intention is to sell the asset on a commercial basis. This brings us to what type of transactions or status of asset are outside the scope of IPSAS 44. Idle assets are outside the scope of IPSAS 44 because there is no intention to sell them, and therefore they do not meet the criteria to be classified as held for sale. Similar to idle assets, surplus assets are also outside the scope of IPSAS 44 because there is no intention to sell these assets. Therefore, they also do not meet the criteria to be classified as held for sale. Abandoned assets are specifically excluded from the scope of IPSAS 44 because the carrying amount will not be recovered through sale. The carrying amount of a transferred asset is also not recoverable through sale. Therefore, transferred assets are also outside the scope of IPSAS 44. Finally, service concession assets are also outside the scope of IPSAS 44. A grantor may provide assets to an operator to deliver services as per the terms and conditions of the service concession arrangement. However, these assets do not meet the criteria to be held for sale because the carrying amount is not intended to be recovered through a sale. This next discussion will focus on the actual accounting for non-current assets classified as held for sale. Once an entity identifies which assets it intends to sell, prior to being classified as held for sale, they must be measured under the existing IPSAS for which they are accounted. For example, if the asset to be sold is property, plant and equipment, and it is accounted for under the historical cost model, the asset must be depreciated and impaired if necessary. If the asset is accounted for under a current value model, then the entity would reverse any accumulated depreciation and revalue the asset. It is at this point, for both measurement models, that the asset ceases to be depreciated or amortized. Once classified as held for sale, the asset is measured at the lower of carrying amount and fair value less cost to sell. However, IPSAS 44 does have some exemptions to this measurement requirement. These include assets arriving from employee benefits, financial assets within the scope of IPSAS 41 financial instruments, and non-current assets accounted for in accordance with the fair value model of IPSAS 16 investment property. A full list of these exemptions can be found at paragraph 6 of IPSAS 44. Presentation and disclosure requirements of non-current assets held for sale are also included in IPSAS 44. These include separately disclosing non-current assets held for sale from other assets in the statement of financial position, and if the carrying amount of an asset is materially different from the fair value of the asset, the fair value must be disclosed. This disclosure requirement was added by the IPSAS-B to increase the transparency and accountability surrounding the sale of public sector assets. IPSAS 44 also requires entities to provide information about discontinued operations. This includes the results of discontinued operations are to be presented as a single amount. The cash flows attributable to the operating, investing and financing activities of discontinued operations, and the amount of income from continuing operations and from discontinued operations attributable to the owners of the controlling entity. Thank you for listening to this webcast, which has provided a brief overview of this project and the requirements of IPSAS 44. This standard is now available on the IPSAS-B's website. Goodbye.